So we come quite a ways off those lows here, that key level, that 54.01. So here we are, we're nearly 50 cents off the lows, or right at 50 cents off the lows. This may go on and rein in dollar CAD a little bit. So just once again, like I said, just keep a cautious eye on that. We really extended that move lower in crude. And coming into the U.S. session, I just would expect the market is coming so far. And we've come into the bottom of this zone here, the 54.01, where you can see that was a prior high. Basically, I think it was like 54.08. And then we came back and sold off $4 and then challenged that and got stuck there in that area for about 6 hours almost, right in here. And finally, we were able to go in and take off. So that 54.01 is really key here on the crude oil market. I think then the key going forward on the upside would be this 55.93 right here. So let's go and take a look where we stand here on the S&Ps, on the SPOOs. And if you look where we found support, this is just below the old 38, which we had these two zones that we used to speak of, 1975 and 38. And for the longest time I've been talking about, I thought that the market would eventually get down to 1975. Now the market actually found support here at 34, and you can see the significance here with the touches here, right here at 34, right across. You see these lows here? Basically a triple bottom right there, before we started launching higher. So we came down here to the 34.50, and it turns out that 2035 is a 61% of the move from 1973 to 2134, and I'll show you that move. That's right here. 1973 to 2134. 2035 was a 61% of that move, which also confluenced with this level here, the support here at 34.50. So it's a great area for the market to go and bounce off, which is exactly what it did. Since then, we've rallied back into the old bias. This was a prior low from before, right here in this 58.50. And we pulled back just a little bit. We made another run up here and almost made it up here to 60. And we pulled back now. We're good on handles. But it's been that kind of volatile kind of day right now with the SPOOs. But that was a great area right in here. You couldn't beat that. That had been tested so many times, this 34.50. But I think that the market, where it's going to have any trouble if it can make it back up here, is going to be the 66. But one of the things about the SPOOs, though, is the ranges have been pretty wide now. You get into some, reminds me of the old days, the way the SPOOs used to trade. And so you're really getting some good volatility here, and it's not staying within a tight range. You're seeing some real big wide swings here. So my thinking, some people would probably shoot for 62. My guess is 66 before you see some real trouble, where the market can't advance. So if we can take one more leg up, I would expect, one of the things with the S&Ps is they've been overshooting to the upside and to the downside, and more often to the upside. But I would think that 66 will be an area where they'll have some trouble. Obviously, we have the old zone, which is 2006 to 2070, and I'll show you that. See right here from 2006 to 2070. But I don't think that they would necessarily make it up that high. They could, but I think where you're going to see the most volume or trouble is right in here in the 66. If we can make one more launch, we can make one more launch. That's there's going to be over 6 handles to take us up to 66. That seems about right, where they could go in and start to run out of gas at that point. Right now, we got the euro on its lows at 10.05. So once again, nothing's been resolved on the euro. I just don't see where it's going to be able to work higher. And the concern that people had was if they would potentially get run over. That concern was taken out. Right now on new lows on the euro at 3, that concern was taken out by the Swiss National Bank, saying they just expect that there may be further pressure on the Swiss franc, which essentially was saying we're not going to step in. We're not stepping in to buy the euro. And as I said, that was more than 70 pips ago. I thought that was open season on the euro to sell the euro at that point. So this is what we're standing here with the SPOOs. If we can get a run up here, it'd be the 66. But I think, like I said, this was a great area. This 34.5, which had been a triple support on the lows, and also coincided or confluenced with this 2035 being the 61% of 1973 to 2134, which was a huge low here. After we'd set this low, falling from this level here, 2090, all the way down here to 1985 to rally back up to 2060, then to fall back to 1973 before setting themselves up for this high of 2134. So that's what we have here on the SPOOs. We're going to move into the gold market. I really don't see anything happening in the gold market. The gold hasn't been doing anything, as I said, of its own volition. It's been all the moves of recent have all been predicated on the dollar weakening. Gold hasn't done anything on its own whatsoever. So I would expect this to be the same case with the gold market. And eventually I do expect this to go on and move somewhat lower, which is this old $45 here. I think we'll definitely go on and make a move to the $45 before you see a bigger, a somewhat more of a correction. Once we get down to the 45, I do expect a bounce, which will probably take us back up here to this 1159-ish. But before it's all said and done, I think we'll make one more low down here, which is here at 37. I don't think eventually we'll probably take out the low lows, but I think before that happens, we'll probably see a move from 45 up towards upper 50s, then one more last fall back here to 37, and then maybe we can put something together for a move back up. But other than that, I just don't see a whole lot happening with the gold market. Let's see if we have any questions. Tom says, when looking at a currency pair movements in progress, what is your view of the most reliable predictions of where the move will end and reverse whenever so many lines are drawn in a chart? Something can always be claimed to be the reason or the stopping point. Your view, please. I mean, it's all relative. I mean, I'll give you an example. We'll take probably the best look would be the one that tricked everybody, myself included, late Monday, and I ended up hanging on to my shorts, which was the euro dollar. Let's move into the 2-hour chart here. So hang on. So this was last Monday, and we talked about that. Well, obviously, we had that big fall. One of the things that I was looking at, and you say, what are the lines you look at or whatever, what I do is I keep it fairly simple. I just go by the levels, and then I use Fibonacci for support and resistance, whether it's on extension or a pullback. And what I'll also do is I'll go in and draw in or color in what I believe are zones. And we talked about that on the crude oil just a little while ago, and the significance of that $51, or $54, I should say, and the market bounced off 50 cents. Well, it's, you're right. The markets are always moving, so everything's always adjusting back and forth. And one of the things I talked about is if you look here in this zone here in 987, we'd see where the market would run up, and the market never stops, particularly at one particular price. If you're drawing a zone, it's just in that general area. So you can see here where the market run into trouble and pull back, run into trouble, pull back, run into trouble, and then finally sold off. Basically the same thing here, and why I thought that 987, when I drew the lines, I draw the lines where I see the most touches. I don't draw them on the top tick or the bottom tick, because I always tell people how many actual trades take place at the top tick and the bottom tick. So I try and go through the bodies or as many touches as I can. Now, if I see something after staring at the charts over and over again, you can see the significance of this zone here. Because after we sold off, we made a run back to the zone, the market consolidated, and once we got past the zone, it really took off. On the way back down, the market consolidated, and then it fell apart. It made another run back up to the zone. It made several stabs on this, but it couldn't take it out, and we slid back. Once we got past the zone, we took off. So when I was coming into last Sunday, and I said, well, wait a minute, I go, let's see where we're going to find support. Because I had already seen what had happened as far as them calling a Greek referendum. We already knew it was going to be a bad day for the euro opening up. So when I looked at the zone, I thought that it was significant. And I thought, wait a minute, we're going to be already down so far. I think there was a fib somewhere in here, I don't remember where. And I said, you know, I want to be a buyer down there. Okay, so when the market opened up, actually, I was looking to sell it against 10.15, but we only made it up to 10.08. So as the market started working lower, I kept trying to figure out how much low, because what I was looking at was to sell the market at 10.08 and cover right here into 9.89. And the market started weaker, and we couldn't make it up that level. So then I said, well, I know it's going to take out 9.87. Where can I start, trying to buy them? So the first area I stepped in was 9.65. And then I stepped in again at, which was actually 9.59. I said 9.60 before. It was actually 9.59 and pulled the trigger. We got as low as 9.52. So what I do is I try and look at where the market is in an overall picture, like where it is today. Because if you think about it, how can anybody want to be selling the market here when everybody loved it up here at 14? So you can look at the market either technically, or what I do is I mix. Now, I primarily trade off of the technicals, but I try and get an idea of what the overall scope or picture is. So I'll give you an example of where we are today. So you're thinking like, well, and I'll give you what my logic was here and why I thought the euro dollar was going to, I came in today figuring the euro dollar was going to be on the weekend. I'm like, well, how does that make sense if we rallied last week? One of the things that we did before we even came in, because we already talked about the Swiss National Bank saying they weren't going to be in it. We know last week that the market took off, and it did because the Swiss National Bank came in and they were selling Swiss francs and buying euros, and that really gave it its first scoot, and the market kept taking off and so forth. And the market, there were still a lot of bulls in the market, and what I like to call market position analysis, because there were still a lot of bulls that believed in the euro. 118, 120, even over here, 114, 115. Well, after they got shellacked this last week, they felt pretty good coming into that Monday because the market had come back. And they were saying, you know what, the market proved itself. It really wants to go higher. But then we spent the rest of the week working lower and working lower and working lower because we weren't resolving anything. And Greece had already defaulted with the IMF. I was pressed to find anything that would be bullish for the euro. Now, let's fast forward to this weekend. So then we get most everyone expected a yes vote. When we didn't get the yes vote, when I came into today's session, my thoughts were, I think the euro has to work lower. Now people were concerned and were asking, well, I wonder if we're going to see the same thing that happened last week. It's going to take off and run over a bunch of people. My whole thought was, nothing has changed. They had the Greek referendum, and nothing's changed. They're still stuck in the same boat. Nothing's changed. Then on top of that, I thought to myself, I go, you know what? Not only has nothing changed and they're in a stalemate, this is going to be a long, drawn-out affair, and it's going to take some time for it to go in and get resolved. Then I added another layer. I said, when I think about it, spineless Cyprus decided he wasn't going to make the decision. He was going to put on the Greeks to go to the polls. That was the referendum, and they make the decision on austerity. Well, how did the decision come out? Now, if the decision would have come out something like 48 to 46 or whatever, and maybe somewhere undecided or whatever the case was. But let's say it was very close, but the no's won out. Then he could have a little bit more of a wrangling to go in and offer some type of concessions. He said he's going to let the Greek people make the decision. So they won, the no's won 61%. Basically, he's handcuffed himself. He can't offer anything. So when he can't offer anything, I'm looking at the euro and I go, I don't see how this thing can go any higher. Not only that, those that were bullish, they've been proven wrong. Then it looked like they were proven okay coming into last week, and then the market loses all its steam. Then we get surprised with that announcement, and now it looks like nothing can go and be resolved. So maybe there's still a chance for the euro. But then the euro, from a technical standpoint, runs out of gas up here at this 38%, and we pull back. And that's after Varoufakis said he was going to resign, and that was mildly supportive for the euro. It took off a good 50 pips. But it started fading. So when we come back up here, the Swiss National Bank, the guys who provided this move right here, they're gone. They came out and said, we see the Swiss franc going higher. Essentially, they were saying, hey, look, don't count on us to buy euros and sell Swiss francs. We're not going to do it. And the reason they're not going to do it is because there's nothing going in their favor. When you look here, the market had quieted down in this flag. So the Swiss National Bank came in at the perfect time to go in and buy euros and sell Swiss francs, which they gave it that extra knock and got everybody all excited, and everything was all, hunky-dory at that point. And so then we go in and we go fast forward to today, and they're saying that they're not going to go in and participate. They're not going to go and be a part of it. So the leg up that we had here, and we were talking at period earlier in the early webinars, I said, I think they're going to have a hard time getting past 11. But when the news came out about the Swiss National Bank, I said, the best that they can probably hope for, and in all likelihood this is going to cap it, is going to be 11.15 right in here. Well, once the news came out, then it was basically open season. We went and started heading lower. Like Blake says, it's a matter of, it's almost like, I want to say it's I'm trying to think it's the right words to go on and say, but when you trade the market, there's different ways to go and look at the market. Some people will only trade on the technicals. And what you're looking for is, and when you're mentioning like with so many lines, how can you know which one is more significant? The ways that I look at ones that are more significant are the ones that have the most volume. But wait a minute, you can't get really volume on an FX chart. You're right, but the way you do that is by the most touches. So one of the things that I was looking for on the way up, when the euro made another run up, and I think this is on Wednesday, I believe it was, here, all this volume was right in here. I thought the market really is way overdone and the market's going to have trouble. So one of the things I look at when you're saying which lines offer a lot more significance, one of the things that I look at is not only the amount of touches, and then what I do is I go on and I'll make the lines a little bit bolder to show that it's a significant level, and you can see all the touches that come across. And more often than not, you'll see that the market will respond to specific levels versus a trend line. And then what you can do is you can use Fibonacci, which is what I used here. You can see here when the market rallied from the Asian lows of 969, they initially ran out of gas right here at the 38%. They took it out by 2 pips, and then they sold off a good 40 pips before they could go on and make another run up here and take that out and come up to 94, and ultimately they faded lower. So in a roundabout way, what you try and look for, and you're trying to say, well, then how do you know which levels mean more? Because you can point at anything. Well, you have to look at things in context, and that's what I do. You have to look at it in context and say, well, wait a minute, the game has changed now because of, in this case, with the no vote. That to me, that just accentuated the negative, and that's the way. At least, like I said, that's the way that I go and look at it. That, you know, there's one thing about trading is there's no simple definitive way to go in and say this is going to work or that's not going to work. You kind of have to use, it's the same thing with the technicals. Some people like to use RSI, stochastics, moving average, convergent, MACD. I don't use those. I primarily just go and use the levels, and I use Fibonacci, and then I read. I do have a news feed, and I read a lot of investment research, and I try and get a feel of where things are going or what the lay of the landscape is, and I use that in confluence with my technicals to make a determination as to where I think a market will move. That's the way that I go and trade. There's some people that don't even pay any attention to news whatsoever, and they trade primarily just off charts. I like a combination of both, and I like to look at the landscape of the market and then use my technicals to go and fit in. Sometimes I may look at correlations, like when I'm looking at crude oil, I'm looking at the dollar CAD, and I say, okay, well, I think the dollar CAD could run out of gas, so I might take pot shots at getting short the dollar CAD, but I will take those pot shots at key technical levels. So I hope that kind of answers it in a long-winded way. Let's go in and take a break because it's already coming to the bottom of the hour, and then we'll come back and wrap things up as we close into the last half of the hour. And thanks for joining us here on the Morning Edge. By the way, Blake will be here on Wednesday. He's camping, and he's out today and tomorrow, and I'm filling for him on the Morning Edge. So he'll be back on Wednesday. So we'll be right back.